Welcome once again. I believe you should be able to see. Sorry. Um, Welcome to Crypto Pulse Weekly. It's been a very interesting week. Very troublesome for me. Let me start by saying that there is nothing new under the heavens, and as long as some people feel like the world is coming to an end as far as crypto is concerned, this week doesn't mean that anything is going to significantly change. Of course, you know that today I'm going to talk largely about FTX and all the saga around FTX and all that. But beyond that, I think the key learning that I'll talk about FTX anyway. I will explain for people for the benefit of people who do not know what really happened. I will explain, what happened and how they got into trouble and how that's probably affecting the prices. But generally speaking, um, lessons learned in life and business: never over leverage. I learned I learned that in a very hard way. It costed me obscene amount of money in trading. That you should never be over leveraged, because once you are over leveraged, your options are limited, your decisions are limited, your decisions are affected because your emotions are affected. So what I see here is a case of a corporate's extreme corporate over leveraging. That's what I see, and I'll explain what I mean by that. So let's get started. We all know what the story is about. It's about the collapse of FTX and the turmoil that that's been bringing on the markets. So, what is and who is FTX? FTX is it's a second. I don't know to call them second generation now. Third generation, I could say third generation cryptocurrency exchange, and it was founded. The funky thing about FTX was that it was founded by a very young man. I think at the time he founded, he was 25 years old. Techie guy, savvy with development, savvy with trading. And at some point, I think the company and he himself was worth about $16 billion or something like that. One of the youngest on the billionaires. But that's aside. FTX is running as an exchange the same way Binance is running as an exchange. But in addition to having an exchange, FTX has about 120 companies, no, 130 actually, under the FTX group. And each of those groups, FTX has either direct interest, or they own the companies or those entities completely. One of such is Almeida Research. Almeida Research, you can say, is the trading company, technical trading company of FTX, or Sam Bank Friedman is the name of the guy, the founder. I'll call him SBF for short. Sam Bank Friedman had Almeida Research, which was the trading entity. Then they had a couple of other uh, companies, quite a number of companies actually, in a very short period of time. But what happened was that Almeida Research was heavily invested in the Luna protocol and the Luna ecosystem, and Almeida Research suffered huge losses when Luna went down. However, because FTX as an exchange was very liquid at the time, FTX decided to start propping up Almeida Research in the hope that they will weather the tide. At the same time, FTX was also buying up. They were also buying up other companies that were getting into the distress situation because of Luna. Essentially, what then happened was, because FTX was also, on the other hand, issuing its tokens to people as a reward for staking with them and all that. There was like 120% of FTX in circulation, and because of that, they were exposed. So, in pure accounting terms, let me put it this way: in pure accounting terms, as of June, July, FTX was 7.8 billion in debts, 800 million in equities. So you can do the math. So they were fried, really, really fried as at that point in time. And a number of things also added to the problem. Instead of allowing that entity to die, of course, everybody was watching out there to say, oh, Amida Research has a lot of stake in Luna, and they have a lot of stake in the what's the name of that? Their saving ecosystem. Instead of allowing that entity to die off, so they started buying up stuff um, for Almeida Research to stay afloat. Unfortunately, they had overplayed their hands, and that's why I was talking about leverage in the beginning. Leverage is what you use. You use leverage in business. You use leverage in everyday life. I mean, even though traders are the ones that talk about leverage a lot, but you use leverage in business. If I want to start a business now, I have 10,000. The business is going to cost me 20,000. I take my 10,000. I go to the bank now. Please give me 20,000. I mean, it probably will not work in Nigeria because they're going to ask you for landed property. They give me 20,000, and I will give you 50% of the business as collateral till I pay back. The bank goes ahead and gives the guy the 10,000. So he has 20,000 to operate the business. He operates the business at 20,000. Now, let's say that his expected margin is 100% year on year. What it means is with 20,000, he's made another 20,000. If he had gone in with 10,000, he would have probably made another 10,000, but that's smaller, right? But because he's gone in with 20, that leverage of 1 to 1 has allowed him to multiply his profits. Like they say, leverage is a two-edged sword. If it goes right, you can make supernormal profit. If it goes wrong, then there's a very, very painful disaster. So what was happening here was that there were a string of crypto companies that were leveraging on each other. It's a similar situation to what happened in 2008 in the financial crisis. How funny, but it's quite similar. Then what was happening then? For people who remember what happened in the financial crisis, the US was generating toxic debts by giving people loans and mortgages that they know that they cannot afford and will not be able to pay back. As the loans were accumulating, the Wall Street guys were packaging the loans as some special kind of high yield bonds and were selling them offshore. They were selling them to anybody that cared to buy. And because this was highly speculative, it caught on very quickly. The problem I think started when people are like started querying, what's this housing bubble has gone on for so long. What's driving this? And people started calling for their money. So let's say somebody had 2,000. He used that 2,000 to borrow somebody 2,000. Then that person took the 2,000, used to borrow somebody else 2,000. Then he took 2,000. Then those people have used the same 2,000 5 times. And all of a sudden, everybody wants 2,000. What happens? There's no 2,000. They just want 2,000. So what has happened here is people have used other people's companies within the crypto sector to leverage their business. And once Luna started crashing, and Luna's crash was quite significant. That's 6 billion plus wiped off within 1 week or 3 weeks. So it was quite significant. And it was similar. It was a leverage situation. They were issuing out Luna and collecting cash, but those cash was not backed by anything. There was no underlying asset that was underpinning the cash. So when people demanded for the cash, they couldn't convert to anything. So in the same way, FTX, even though the exchange was not doing badly, I don't think the exchange was doing badly, but they were overstretched is the word. They overstretched their finances, and they became too exposed. And in fact, on the side they were saying, okay, that they are what's it called, that they were being mean and being abusive to the owner of Binance. But I think the Binance guy saw what was happening. He probably saw late because I was reading another tweet when someone was saying his boss. So that guy's boss, they specialize in salvaging companies that are about to go under or helping them find an escape route. And of course, the guys from that guy's account, I think that guy has been in the business for about 32 years. Saving people from chapter 11 essentially. And the guy said his boss sent him an email that I see that this FTX guy, that it looks like he's a little bit over his head, that he's going to that he's running into trouble. Now maybe you should try and set up a meeting with him. He was now saying to the guy that he doesn't really know him, that he's only had a Zoom meeting with him twice before. So he said he sent the guy an email that the guy didn't respond to the email. That then there was another time he was actually the same location where the FTF guys was staying, and was telling him that my boss is around, he's in this hotel, blah blah blah. You know, would you mind having lunch and all that? And he never got any response to that letter. But that was back in July, by the way. And when I think about it, he could have been saved, because those are people who know how to get people out of difficult situations. Because what will have happened is we'll have structured the deal where one of these brick and mortar JP Morgan like institutions will have bought the business, and those guys have wicked balance sheet. They will have bought him for maybe like 6 billion, and leased him out, and then they continue running the exchange, they wipe out the toxic assets, and they move on. Unfortunately, um, I was thinking about the word youthful exuberance in Yoruba, which is my mother tongue, and the direct translation of youthful exuberance is to say that it typifies youth as a disease. So, youthful exuberance in my mother tongue is saying you are suffering from youth, from being a youth, something like that. That's exactly what it means. Like modern shit. Well, I think it's seeing the financial markets of 2008 play over and over again. But what does it mean? What does it mean in context? In context, like I told people, the technical levels I've been talking about for the past 6 months, um, the technical levels are still the same. I think Bitcoin will get to 10K, and I think Ethereum will get to 500. At that point, I think I will seriously consider going to borrow money to buy, because at that point I know that we're sitting near the bottom if we are not at the very bottom. And it's very obvious why that's the bottom. Technically, that's the bottom, by the way. But fundamentally speaking, because everybody knows what the fair value per time of any commodity is, that price is unilaterally agreed by the market. It's almost like the market is behaving like a single person, a single entity, haggling with itself to agree that this is fair value. So what is happening now is the market is pricing in all the terrible things that are happening in the world, pricing in the stock market problem that's being caused by the US dollar and the inflation and recession that everybody's talking about, pricing in all of that chaos into the price of a commodity and how much the commodity can be sold for. I'll give you a very good example to tell you that it's not just the crypto market of Bitcoin price that's been affected. And many of you guys are in Nigeria, so you understand what I'm saying. There's a cash crunch in Nigeria, and I get calls from people every time asking me to help for money, and it's more difficult now because the government has created all sorts of measures that are causing people to seek cash, preferably in foreign currency. What that means is people that have very large asset bases that are not translatable to cash, i.e., real estate or land, they have a problem selling right now because the market is in a downtrend. So if you say I have a plot of 10 million, I want to sell it for 10 million, you probably get priced in at 7, which is 30% of the top. The reason that is because there are more sellers than there are buyers. Same thing with the issue of naira, dollar, how it's been going. The original intention probably of the government was to use that switch in currency to cut out people who want to, launder money through election, or the kidnappers or the bandits that have stashed money. But the unintended consequence is that they're now going to make Bureau the changes to do bulk transfers for, I mean, bulk exchanges for them. And because those ones, they move in cash normally. Before the before the EFCCs and the DSS started moving on them, they transferred a lot of cash already. I mean, how many? I can't remember the volume. I think 500 million. Is it 500 million or $500 million within the first week of that announcement entered the banking system? 500 in naira. I mean, in naira, $500 million equivalent entered the banking system in Nigeria within the first week of that announcement. So what it means is there is a lot of sellers that want to dispose their property, but they can't get buyers because people need cash. So people are going to, I mean, I'm hearing people going to, lending houses where you take your property there and you say you promise them you pay whatever, and then they value the property at whatever they want to value the property, and they say, okay, this is how much we're going to give you. The same thing applies generally in all markets. The difference here, especially, and I usually say this, especially for Bitcoin and Ethereum, is that, especially Bitcoin, the difference here is that this is a non-perishable item. It's digital assets. It's more durable than land. It's more fungible than land. You can't move your land in Nigeria, for instance, and say you want to go and sell it in US. You can't move your land in US. You can't move your house in US and sell it in Australia. Neither can you move a house in London. You can't even move a house in London and sell it in Luton, which is just 1 hour away. So because of that, digital asset, like I always say, of Bitcoin is the first advancement, technological advancement of man that makes it possible to move an asset through time and space with minimal effort. And that's, if you listen to all my videos on YouTube, that's everything I've been saying, that it's just much more than the price of Bitcoin and how much Bitcoin is selling for today. But that concept that you can move digital value through time and space without any stress, without any intermediary, that is the selling point. That is the real technological breakthrough. So whatever happens to the price is just market cycle. If the price of Ethereum gets to 500, then you know that when it gets to all-time high in the next cycle, which is 5,000, that's 10x. Chances are Ethereum could go as high as 10,000 or more in the next run, because Ethereum now has institutional buying because of proof of stake. So Ethereum could go as high as 20k. If Ethereum goes from 500 to 20k, how many x is that? 40x. So understand that when the prices are bad, that's when it provides the most opportunity. I have a story of a friend. Well, it's not a friend, it's an acquaintance. He's a YouTuber. He's a very social media person in crypto. He's that guy is probably like 29 or 20. Yeah, probably like 29. He sold. He said he sold his car. He sold his car when the Bitcoin crashed during the COVID crisis. He was already a Bitcoiner and all that, was trading. He sold his car, got a 10,000, was it 10,000, 20,000 pounds loan from his dad. No, he had 40,000 pounds borrowed, and then he bought Bitcoin, bought a number of coins, and by the time he was selling some of those things in, was it May or even April of 2021, the prices were insane. I mean, it was absolutely insane, because imagine buying Bitcoin. Bitcoin went to like 4,000. Imagine buying Bitcoin at 4,000 and selling at 40,000 within the space of less than 16 months. So understand that the market will push the prices based on the market sentiment, and the market sentiment is like a cycle. It's like pardon the ladies in the house. It's like a menstrual cycle. There are rough patches of the cycle. There are smooth patches of the cycle, but it's part of the cycle. You can't avoid it, because there will always be sinusoids. There will always be ups and there will always be downs. And another thing I wanted to say about, exchanges and keeping money on centralized exchanges. Yeah, centralized exchanges, especially new ones, can be, yeah, FTX really became popular in the last 2 years. So I have an FTX account, but I didn't really keep anything there. Same thing with Celsius. I think I withdrew my Celsius like way before Celsius ever had problem, because I didn't like how their withdrawal was structured. Their withdrawal was not structured like withdrawing normal crypto. It wasn't structured like that. So I had a problem with it. Uh, so I wasn't keeping stuff there. If you are in if you have intent of storing digital assets, my advice is that you split your assets into three. You have one in what you call cold storage, which is those ones that you keep on, what's the name of this? Trezor and the likes of Trezor. I can't remember the other guy's names. So that's cold storage. That's like, savings, or something you want to give to your kids, especially when it comes to Bitcoin or Ethereum. You keep those ones, they are completely off the grid. The only thing that can move that set of two coins from your wallet, if somebody has the passphrase. So of course you have to keep the passphrase. In my opinion, I will even encrypt the passphrase in such a way that you scramble the words, so that people don't just have access to moving the money. The other option, the second phase, is to have some in what you call, I'll call them warm wallets. They call them hot wallets, but I'll call them warm wallets. So wallets like, SafePal, Trust Wallet, My Ethereum Wallet, MetaMask, that you can install on your phone. They're literally okay if you are not interacting, if you are not subject to phishing attacks. Like maybe you went to connect to this particular strange smart contract. If you don't have anything like that, for the most part, most of those wallets are safe. The third one is of course the exchange. So if um if you are risk averse, you can keep half or 75% in cold storage, then keep 25% in hot wallets, and keep none on the exchange. If you're like me that are not really risk averse, you can split it 50-50. But understand that exchanges, especially in times of difficulties like this, only exchanges that have high volume and high liquidity are usually able to weather the storm. I used to have an exchange. I can't remember the name of that exchange. Very lovely exchange. They were only a Bitcoin leverage trading exchange. Only traded Bitcoin. Okay, I think they did Ethereum and XRP. Very small, very basic. I love the exchange because it was very simple. No, there was no, it was very straightforward. It was like almost like a decentralized concept of an exchange. It was almost like the YDX exchange, but it was much more simple because the transaction costs in Bitcoin, you know, everything was in Bitcoin. If you wanted to transfer, it would take the costs as if you do. If I it transferred the stuff on chain, it wasn't moving it on a layer two. It was moving it directly on chain. But it went down. They went down last. When was that? Between May and November last year, the exchange went down. And of course, the exchanges can go down for many reasons. I think sometimes some exchanges are lucky, they don't have regulatory problems, they don't have user problems like Bitfinex and BitMEX has or had at some point. At some point, for instance, Bitfinex and BitMEX are the biggest exchanges. These were like foundation exchanges. They were first generation. If you didn't have, and then what's the name of this? Bitrex, Bitfinex, BitMEX, and Bitrex. Those are first generation exchanges in former bull runs. If you didn't have those accounts at the time, you are not interested or you don't know about crypto. But all of a sudden, they just went into oblivion when in comes Binance, in comes Coinbase, you have Crypto.com, and and all the younger followers, and all of a sudden, those exchanges suddenly lose relevance. So yeah, exchanges can lose relevance. Like I have some people who are very huge fans of Binance, for instance, I like Binance. I believe they are doing it right. Uh, I believe the guy's level. I mean, the guy's head is very tethered to the ground, and maybe because of his Asia Pacific upbringing, he's really very level-headed. It's not his reasoning is not core American or full capitalist like that. So I think maybe because of that, he's able to he's very grounded. So that might give Binance some and because like I said of on Binance in times past, Binance is an exchange that has a token, or well, you can say it has a coin now, because they have their own exchange. They have their own blockchain called Binance Chain. In fact, two blockchains. There used to be the Binance Beacon chain and now the Binance Smart Chain. They have on top of that, they have a platform called a launchpad, multiple launchpads actually that help other tokens to launch. And then they have an array of tokens that are created out of the Binance Smart Chain. What that does is it increases the ecosystem, builds the use cases, increases the community, and that's what drives value. Really, that's what drives value for crypto. If if a particular crypto does not have use case, doesn't have community, doesn't have utility, it's just a relic. It's as good as a figment of a fraction of um, of a decimal. So in conclusion on the FTX issue, I think well the fight for Chapter 11 is probably going to go down. But it's good for the market because, like somebody said, and I didn't understand what the person said. That was last year actually, December. That until we get rid of all the leverage in the system, that the market will not reset. Excuse me. Sorry, at the time I was thinking he was talking about the derivatives market, but apparently he was really talking about the core crypto market, like what I just explained. Those guys were leveraging their assets almost like 1 to 5, using their tokens and the other investment that they had. And once Luna started to crash, that was when their problem began. So yeah, um, lessons learned. Yeah, lessons learned. Quite. I mean, don't overstretch yourself. You can't grow beyond your capacity. If you grow beyond your capacity, you're going to bust. Um, don't try to make it slowly, like somebody will say. Don't try to go too rapid. I think that was what happened. Yeah, they were trying to become, the Binance of the North America, and they had a lot of venture capital backing. By the way, it's just that the growth was too rapid, and then you now have this phase of the market cycle. You can't do anything about this phase of the market cycle. It's only companies that weathered it before that know to prepare for it. If you've never been there, you've never been there. So unfortunately for them, they've never been there. And I mean, what happened to Luna was one of a kind. We are still licking our wounds from Luna, but that's another story. So what happened to Luna was one of a kind, and I think nobody factored that in when they were making their projections generally about the crypto world. So having said that, let's look at the chart before we call it a day. Where's my sharing? Yeah, so nothing significantly different from okay, well, except that the market seems to be agreeing with my postulations from last week. So yeah, we're a bit down from last week. Last week we were around 21,000, and I said, well, I wasn't convinced that 21,000 was going to hold. Sorry, I'm not sharing yet. I think you should be able to see now. Yeah. So I was saying that I wasn't convinced that 21,000 was going to hold because the previous high before 21,000 was 22,500, and the next high was 21,600. It wasn't quite, it didn't match up to the previous level. So uh, it's um, it's a lower low, technically speaking. And what that means is that, like I said on the weekly charts, the weekly chart actually does better justice than the monthly chart. The weekly chart shows that um, the bottom of the retracement is at 10,500, 10,586. If Bitcoin, not if actually, at this point, when Bitcoin gets to 10,500, I don't think it's going to bounce back. Well, it's going to bounce back suddenly. There'll be a lot of buyers sitting at 10,000 level. But over and above that, I think there's going to be significant consolidation, and then the price will just refuse to go down, just start climbing up because many people have several buy orders at 10,000. And I remember after the last halving in May of 2020, when the price started going up, then suddenly crashed at the beginning of summer. When it went down, I think it went down to maybe like 7 or 8,000. What was that? That was somewhere around here. Here, yes, September. It went down to 9,008. And after staying there, after getting to that 9,000 for like 3 weeks, it just didn't come down again. Then after about 2 weeks, I remember saying then back in 2020 that the way this thing is looking, it looks like we might have bottomed out at 10,000. And from there, it just took off and went all the way to 40,000. No, was it all the way to? No, no. First, it went through it went through 20,000, then to 40,000, then to 60,000, 65 before coming down again to 28, then to 68. So I think there's too much bad news. And I said in July that recession had already started, that the government is not admitting it, and that they will pad the figures to make it look like the recession has not started. But that I believed strongly that the recession has started then, and that the effects will be shown in the cost of, apart from inflation, will be shown in how the economy is lined up. And we can see what's happening now. Bank of England has come out to say, might be going into a longest recession. The competition might be going into the longest recession ever. US is saying, yeah, the economy is still doing good, but we suspect there might be recession lurking somewhere. There's already recession. Because what they are doing is mopping up money from the system. And when governments mop up money from the system, they make people afraid to spend. When people are not spending, I mean, companies, let me not say people, they make companies afraid to spend. When companies are not spending, they are not oiling the productivity of the economy. So inadvertently, it will lead to cash flow problem. So in this case, the recession is a reverse engineered, like somebody's okay that was asking on what triggered recession. The recession is reverse engineered. So I mentioned it about I think about 8 or 12 weeks ago. We first had COVID. COVID was a forced shutdown of the economy. There was nothing wrong with the economy. The economy was booming. Then you shut it down. It's like those heavy plant generators that you're not supposed to shut down. Once it starts running, you're not supposed to shut them down unless it's 5-year maintenance. So the economies were shut down abruptly, almost forcefully, and then COVID rolls by. They pump in a lot of money while the economy was shut down. It's important to note that. So there are factors of production, land, labor, capital. You know, the economy is not producing anything. Then you pump in capital. It's just like crypto. Your token is not doing well, then you pump in, you increase the circulating supply. The value is going to drop. So the value of everybody's money drops because the US government prints 25%, so everybody becomes 25% poorer. However, COVID finishes and the economies are roaring back to life because nothing was wrong with the economy before. The economy was not sick. The economy was just put on standby. Now you switch it on, economy is ready to go. Unfortunately, at the same time that the economy is ready to go, a lot of money in people's pockets that they didn't produce for, and then the economy is making its demands. So the economy will grow. There's too much money in circulation. Inflation will kill the United States if they didn't take the measures they are taking. So for them to stop inflation from killing the US dollar eventually, they need to do reverse engineering, which is mop up the funds. How do you mop up the funds? You start to issue US dollar bonds. You see, US dollar bonds are US dollar debts. They are the most secure form of instruments. Well, almost the most secure in the world because what it means is it's based on the US dollar's economy. As long as there is US dollar, the bonds will sell. So they started selling the bonds, and by increasing the interest rate, they make the bonds more attractive. What I was saying about, I think 5 weeks ago, was that for people that have very, very huge capital, like trillions of dollars and hundreds of billions of dollars, 0.5% gain in a year is more than good enough in most cases for them. So what they're doing at any point in time is taking a look at their capital allocation and asking themselves, okay, what is the opportunity cost of putting this money in US Treasury bonds for which there is no risk? You just put in the money there and the money just starts breathing 3 or 4% interest every year. No risk at all. Or medium risk, put it in S&P 500, or put it in the stock, in the equities market that's crashing. Naturally, because most of them are risk averse, they put it in bonds. So what the US Fed is doing is stimulating the interest for US bonds, and because of that, as the US bond market go up, equities must fall. It's a natural. It's almost like gravity. It's um, it's physics. It's like physics. action and equal action and equal reaction. If the bonds go up, equities must come down because the bonds becomes more attractive if the interest rate on the bonds are going up. And then the big guys will like, why do I need to be moving money around all the time? Why don't I just push it into bonds and watch it grow? So that's the reverse engineering way in which the US economy is damaging the market. Now, the recession is a direct result of the money printing that happened during COVID. You see, the Ukraine war is just it's a collateral damage, in my opinion. It's a collateral damage, and unfortunately, it's happening around this time when the effect of the recession or the effect of the hyper money printing of 2 years ago is just taking effect. So now it now looks like all of them are muddled together, but they're two separate issues. The Ukraine crisis has its own effects. There'll probably be a grain problem somewhere now down the line next year in terms of shortage of grain. Um, Globally, there'll probably be shortage of oil as well. Not shortage really. You see, the world system is a very well. The more you know about it, the more burden I become. Sometimes I don't like to talk about it because it's almost like it's a massive sport. It's a massive game of Ponzi. So let's take oil market for instance. I'm sorry, I'm talking about oil in the crypto session. Let's take the oil market for instance. There is enough reserves of oil in the US to last them for so many hundreds of years. But instead of buying their own oil or getting their own oil, US goes out and start collecting oil from other people, achieving two things. One, ensuring that the petrodollar, meaning the dollar is still being used actively in the purchase of crude oil, has been agreed the Bretton Woods Agreement of the 70s. So the dollar is still very relevant as long as they use it to buy oil. So they go into the international market and buy. Then they form an alliance with the Saudis and the Middle East to say we'll form OPEC, and we determine how much supply of oil we want to push in at any point in time so that we can hedge in our production costs. That was the original idea. Well, that was the claimed idea that because this price is always fluctuating and going up and down, let's create this tap. Let's call it a tap system by which we can release oil and increase the flow, such that if the price becomes too high, we'll release the flow so that the prices drop, and if the price becomes too low, we'll tighten the tap and the price will go up. So OPEC has that mechanism, so they can tell you, Saudi, please drop your production to 1,000 by 1,000 or 1 million barrels per day, so that we will not have excess in the Gulf. But what's happening now is that balance, number one, is shifting because Russia has blown up. Well, technically, they've cut off their supplies to the European countries who use their stuff for their gas for heating. So that automatically drives up the price of gas, and of course, as the price of gas is going up, you can expect that the price of oil too will naturally go up. Also, the war in Ukraine is defragmenting or fragmenting the oil and gas markets because Russia now has oil that it wants to sell at black markets, quote and unquote, if you can pay in ruble. So for those that are willing to pay in ruble, they will sell to them. If I understand that they were willing to collect Bitcoin at some point in time, that people are willing to buy from them, they will sell to them. So oil is affected by the cartels that control the price. Same thing with, in fact, so every major commodity. I kid you not, every major commodity is controlled by a cartel. I have it on good record that most years in the United States, the government pays farmers to destroy their harvest because the harvest is just too much. It will create a glut. So when people start talking about food crisis, it doesn't it irritates my mind because on the one hand, you know that some people are actually incinerating harvests so that there's not enough food, and on the other hand, you're saying there's food crisis somewhere. Let's not go into that. I'm just gonna I'm gonna start rambling if I go into that. If I go into that, let's stick to crypto anyway. Like, but you're the one that triggered that question. Anyways, what I'm saying is, based on what is going on here, the price of Bitcoin is definitely having a second free fall. Well, I mean, in fact, let's analyze this on the 4-hour chart. I can tell you that what this is saying is that in the first instance, we can expect Bitcoin within the next few days to get to 13,000.
Yeah.
That we can expect to get to 13,000, probably have a bounce back, then play around 13,000 and 15,000 for a while before heading into um, the 10,000 territory. Ethereum, on the other hand, please mute your mic. Yeah, Ethereum is still following the downward trajectory I was talking about before, and like I said, I'm waiting for Ethereum at 500. When Ethereum gets to 500, don't be surprised if I'm asking you for money or asking you to borrow me money, because you probably know that I want to use it to buy it. I want to use it to buy Ethereum. Anyways, Ethereum is following a perfect, what's the name of this thing? Elliott wave pattern. Perfect Elliott wave pattern. 1, 2, 3, 4, 5. The downward leg, which ends that wave down, is definitely going to touch 1,000. That's on the daily. That's on the daily, by the way. On the weekly, 1, 2, 3, 4. On the weekly, man, Ethereum is looking monstrous on the weekly. I must say, it's scary. Let me redraw this chart. I have it somewhere else, but let me just redraw it. Yeah, yeah, yeah. That was where it was. Yeah, 511. Guaranteed. Ethereum is going to hit 500. Guaranteed.
Can we jump in and ask questions?
Go ahead, Ogo.
Yeah. So when is it getting to 511? When is the projection? Which are they asking people to borrow me money? So when?
I can't say when. There are so many factors that determine, when the market gets to the price. At the beginning of the month, I did say that I was expecting a temporary rise in the price of Bitcoin and crypto up until midterm election, which was this week. And that's exactly what has happened. So if you look at if you look at actually since October, the price has been going up until this week, like crashed because there were midterm election. And generally speaking, the market goes up ahead of the midterm election, usually just to give the market a feel good. I don't know. The market makers do it in such a way that the equities market are looking good just before the election. Then it comes back to its normal state. So right now, the market is resetting back to its normal state. It's gone to Monte Carlo and back. So I think that, yeah, just like the Ethereum price had gone from 1,002 in September, it's gone to 1,006. It's going to touch 1,000 for sure before heading down to the 500 region. When I think maybe January or February. Personally, that's why I think it's going to happen. And I'll tell you why. I'm not picking the number off my head. I'll tell you why. The last Fed meeting, the last Fed speaker, the chairman of the Reserve Bank of the US, the last speech he made, he made some passing comments about their, how did he say it now? Said it in such a way like we are happy with the response. It's almost like we're happy at the outcome of the manipulations that we've done, and that we think is working. So that tells me that they're just gonna wait it maybe another quarter and see, okay, it looks like this inflation is coming down now. Let's let's remove the chokehold that we put on the market. So if indeed, and the CPI numbers look good this week. So if indeed inflation is coming down, another one quarter, I think everything will start to ease out again. But like I said, I think that the next up upward movement of the market will come with the introduction of a lot of CBDCs. I talked about it, I think, maybe last week or before. So I think that we'll have one country will run central bank digital currency. I'm almost too sure about that. I don't know who's going to go first, but I'm almost too sure that somebody's going to try to run it first. So, like somebody said, so what do we do? We have our bags. Just hold your bags. As I said, if you have um, if you have a choice property in Park Lane in London, or you have if a River Thames View property at Westminster, you are not going to sensibly, you will not sell it during a time of war because you need money. It's not a sensible thing to do. Even if you wanted to sell it, people will advise. I mean, people are your friends that will say that this is a vintage, valuable property. You don't know what it can be in the future. Regardless of at what I mean, how many years now is almost 400 years is the US pound. So I mean the GBP. Even during the war, that everywhere was being bombed shitless. That plots of property is still high value considered to everywhere else in London. So the same way, if you have I mean, I'm not talking about Shiba and shit coins now. I mean, if you have proper coins that seem to have lost a lot of value, understand that they're not perishable goods, they're digital assets, and they don't expire. Bitcoin never expires, Ethereum never expires. Yes, you can have them go to zero. You can have them go to zero like Luna and probably FTT is doing. But understand that it's going to be really worth a lot. And I've talked a lot about some tokens to keep an eye on against the next bull run. Of course, Bitcoin is there. Of course, Ethereum is there. Of course, Binance is there. Solana is very weak now. And Solana has suffered a lot of attacks, by the way. All sorts of attacks. But it's still standing. So that tells me, well, and because they were the one that raised the most venture capital fund in 2021. So that tells me that when Solana bottoms out, well, it looks like it's close to it now. When Solana bottoms out, if it survives this, what's it called, FTX crisis, and bottoms out, even if it bottoms out at 50 cents, what am I saying? If it bottoms out at $5 or $1, it's still okay because at the bottom of it all, it was like 90 cents or thereabouts. So it's really never got into its bottom, and because it really came out just before the bull run, the last bull run, they have a lot of room to go. They're just building. It's almost like the first institutional grade blockchain, institution backed blockchain development. So they have a lot of money to run through from a financial runway point of view. So they're not likely to stop development. They're likely to continue development, regardless of how much attack they're suffering. So if they weather through and Solana drops to, actually, if Solana drops to $1, I'm going to buy it immediately. I don't think it's going to drop as low as $1. That would be too cheap. But if it drops to $1, it's extremely undervalued. Another thing you need to care to worry about, or well, not worry about, but keep in mind is the total market capitalization of crypto. Where is that? Total, yeah. The total market capitalization of crypto is just measure money flow. It's measure of money flow. Right now, what looks like the real bottom, well, temporary bottom, 705, and that's 705 billion, and that's because that was about the top of 20. That was about top of 2017, 2018 bull run. So if it drops there, that means the market has essentially gone back to the peak value it was back in 2017, 2018. So that automatically should form a bottom for the price, generally speaking. And like I said, because these are very long-term technical indicators, they are very powerful. It's almost like a self-fulfilling prophecy. All institutional investors are looking at them. Traders are looking at them. Everybody's looking at them. Hedge funds, everybody's looking at them. So, excuse me. So once people start saying that the prices are getting to the floor, people start taking their positions. So I think that's all I have for today. If you've lost money from FTT, sorry. Um, I always give the analogy of or I always quote the popular billionaire Mr. Femi Otedola, that they call us billionaires because we've lost hundreds of millions. So if you want to become a millionaire, you're ready to lose tens of thousands or hundreds of thousands. Uh, um, I'm not saying that losing money, or that you should lose your money. No, what I'm saying is that making losses is part of the process. It's part of the business. Just like if you're in a business and you're selling, there are some transactions that will go well, that you make profit. There are some transactions that won't go too well, you break even. There's some transactions that will go bad. Let's say you're selling retail and there are tons and tons of returns back to back to back to back to back. You'll have to write them off. So in the same way, if you have tokens that have gone low, I don't think you should sell them. Like I told anybody that still has tokens now, don't sell. If you didn't convert to USDT or stablecoin when I made the call, then you are better off just holding. There is no point at this point. You're better off holding and literally adding to the position little by little. Because when the quantitative tightening stops and the equities market begins to rumble, the price of Bitcoin and crypto you will not be able to catch it, frankly speaking. And I mentioned this in late 2021 that we've not even seen the involvement of Arab money in crypto. That once Arab money starts to fall into crypto, there's going to be some dangerous dimensions. Anyways, keep stacking your assets, and like I said, I'm looking for side hustle. If you have side hustle for me, I want to add to my sacks. So just kidding. All right. If you don't have any question, I'm happy to let everybody go and have a nice weekend. Let me see. I don't see anybody asking any question. If you have
Let's ask one more question. So, do you think crypto.com is still a good exchange, right?
no,
We don't have access to Binance and Co.
you don't have access to Binance.
I don't want to do all those P2P and all those. I'm too lazy for all that. So,
well, it depends. So you have access to crypto.com, right?
yes, I do. I'm just saying, is this still a good platform?
Yeah. They're very okay. You see, let me tell you the story about crypto.com.
I have crypto.com. That's what I use mainly. Okay, continue.
Crypto.com used to be called Monaco. I don't know if you know that.
No.
Okay. So crypto.com used to be called Monaco, which was the name of the company. Um, and that was why their original native token was named MCO, because crypto.com was Monaco. The current CEO at the time had run about four companies to the ground, meaning he had failed as in founding four companies. And then when they launched Monaco in 2016, 2017, some people made money, some people lost money. There were a lot of noise around. They felt like the platform shafted them, that they outsmarted them. But I kept saying something throughout 2020 and 2021 that You are better off with somebody that has failed before as a businessman than somebody that's never failed before. The fact that the guy has failed 4 times is enough for me. Is great credentials because the guy knows what not to do to run into trouble. And like I was talking about leverage the other time, sometimes your what's it called, your back just become full that you feel on top of the world that you want to leverage. Your business is just buzzing. Everybody falls into that kind of as the Bible calls it, deceitfulness of riches. And if you have not failed before, there's every tendency that you feel like, yes, we have money, let's buy it. Then we have money, let's buy it. We have money, let's buy it. Accredited bank, I mean, our banks are going to finance it, let's buy it. You now buy 7 companies in a row, and then your balance sheet has been stretched to the high heavens. Otila, as they say, is now completely clean, and then trouble breaks, and immediately trouble breaks like this, everything just falls apart. So the guy has run like 2 or 3 companies that failed before, and in fact, the first attempt of Monaco did not go well. When Monaco did not go well and failed, then they went to buy the domain crypto.com. They bought it for like $1 million or $3 million to buy the crypto.com domain, and then started to build an ecosystem and so far they're doing okay. Yeah, I'm sure they are taking some significant losses as well because of all the stuff that's happened on the ecosystem, but they're still there. They're doing okay. And as a matter of fact, they seem to be copying what Binance is doing in terms of roadmap and development roadmap. So Binance has Binance Chain. Crypto.com went to create Chronos Chain. Binance has Launchpad. Crypto.com has created Launchpad. Binance has what's it called? Tokens that are generated from BNB. The BNB smart contract tokens. Crypto.com has created CRO smart contract tokens like what's the name of this one I was talking about last year? I still saw it on my phone this evening. VRT or something like that. No, not VRA. World Cup token to load up on log minutes. World Cup tokens. I've not been following the World Cup tokens because I've decided that I'm not going to be stressing myself on trying to catch the wind or catch the tide. But there are enough World Cup tokens that are flying around. I'm not following them, to be honest, so I'm not able to answer that. But I'll have a look at it. World Cup is supposed to start in a few days' time, I think. Yeah, it should be like next month or next week. Next weekend.
Okay. So a quick question is just that somebody posted that crypto.com has more leverage in SHIB than Ethereum. That was what made me have cause for concern. So all is well, right? If not, let me just start running away from crypto.com. But I don't know anywhere else to run. Coinbase is stupidly expensive.
Are you in the US?
Sorry?
Are you in the US?
Yes, I'm in the US.
Can you try downloading SafePower?
Safe what?
SafePower wallet.
Safe Power.
Yes, SafePower wallet. Let me type it in.
Okay, please do.
Wallet.
And what will that do? I can access Binance from there.
Just give me a second.
Okay.
Ethereum wallet. Wallet. So these are like one wallet. I do call them. I call them one wallet. Help you to buy. You can buy crypto directly into these wallets.
So Demi,
Yes, Tolu.
is Safe Wallet owned by Trust Wallet?
Sorry.
Is SafePal, is it owned by Trust Wallet?
No. Trust Wallet is owned by Binance. SafePal is a separate.
Okay.
Yeah.
So what does SafePal do?
Sorry?
What does SafePal do?
It's a what I call it. It's like a warm wallet or hot wallet that you can download on your phone. Now, what it does It allows you to store tokens on the wallet on your phone, or essentially, if you, I mean, for instance, you're using Android or Apple. Once you've written down your passphrase somewhere, you can always, any phone you change to, you can always retrieve the wallet, and then the wallet will show up on the app, and you have access to that wallet anyway. The good thing about this is the money is sitting with you, quote and unquote. It's not sitting on the exchange, so it's not subject to counterparty risk, as they say. Um, Trust wallets and my Ethereum wallets actually now have, especially if you're in Europe or the US, Trust wallet and my Ethereum wallet now have a functionality that allows you to buy directly into the wallets. And I see that MoonPay, Simplex, and Apple Pay are one of the ways you can pay to buy. So for people in the UK who might be worried about people like Satanda that won't allow you to buy more than £1,000, you can just buy it on those wallets with Apple Pay. I hope that answers your question.
Does too many wallets that some of them I don't even know what's happening. So yeah, I'll look into it. Well, currently I don't even have any stake in any crypto. So my money sitting on crypto.com is even like I know is insured because it's not sitting in any of their investments. So they can't even do anything to me right now. Yeah, but I'll look into the safe wallet.
There's also what do you call it now? Kronos wallet by crypto.com. So these wallets, let me just explain this concept before I call it today. These wallets are like web addresses. Let me use that word. Think of them like unique web addresses that belong to you, just like your email addresses. Your email address is passworded. Sometimes you have two-factor authentication. So these wallets are like addresses on the net that are created for you. So when you download the app and you generate the wallet, it creates the address for you. It gives you the passphrases to the address, meaning the key to move the money. Some of them come with 12 keys, some of them 18 keys, 18 words, some of them 24 phrases. Now, you take that to store those words somewhere safe. Any phone, if your phone gets lost, or you change your phone, you wipe the old one, you install the wallet, you can recover the wallet by just putting in the phrase. You don't have to worry about any exchange holding your token because literally you're holding it. So that's the as opposed to an exchange. An exchange is like online banking. As a matter of fact, it is glorified online banking with blockchain foundation. That's what it is. So that's another option. That's why I said, if I don't know if you joined earlier, depending on your risk aversion level, you can store your tokens half online, half in one wallet, and maybe like 10% on exchanges.
Yeah. Can you type the Kronos?
Sorry?
Can you type the Kronos on the chat so I'll make sure that I have the right spelling? Type in okay, Kronos. Okay, sure. Thank you.
Yeah.
Thank you.
All right, guys. Thank you very much for joining. And for guys in equities, people who are into stock, I think you should wait for January. Oh, yeah, I think you should wait for January. I just thought I should mention that in passing. I think you should wait for January, even though it looks like the dollar is weakening now, and it's gone below. Yeah, it's gone below the previous shoulder. But if it bounces off, if the dollar index bounces off 105, then there's going to be some more suffering in times to come. So that's it for today. Thank you very much, everyone. Have a lovely weekend.
Thank you. Bye.
Thank you. Good